In today's video, I want to take a quick look at the stock market. I don't know how many times I've said this, but people continue to try and short the market. Um, I've been at this for 30 plus years. I have never figured out any consistent way to pick tops, certainly not to pick tops in markets that are being driven by central bank QE. They can go much further and longer than anyone expects. Trying to short the market based on candlestick patterns just almost never works. It took me a while, and it cost me a lot of money, but I finally learned my lesson that over time, shorting generally just ended up costing me more money than I made. And that doesn't mean that I didn't have winning trades from time to time by selling short. I did. And typically what would happen is it's like a gambler going into the casino, and every once in a while he'll win, and that's just enough to convince them that they've got the cards figured out, and so they keep going back. And over time they consistently lose money. And that's exactly the same thing that happened to me trying to short. It's just markets go down differently than they go up. Tops form differently than bottoms, and it's just difficult, almost impossible to successfully and consistently pick tops and sell short. You end up winning every once in a while, and it's just enough to keep you doing it. And over time, generally, you just end up losing more money than you make. And I would challenge almost anybody, if they go back and look at their records, add up all the winners and all the losers from attempts to short, you will find that you are in the red, and your account will be higher over time. Over a 10-year period, you will have more money in your account if you just forget about trying to sell short and try to pick long trades. So now, in regards to the stock market, in my last video that I did on stocks, I kind of guessed that maybe we would probably, at least the S&P anyway, would probably be in a choppy phase. Maybe something that kind of looks like this, just kind of back and forth until we get to that Fed meeting at the end of July. And once we get past the Fed meeting, I think we then have a chance to move down into the next intermediate cycle low. And I still believe that we've got to, at some point, test this March bottom. I don't think we're going to get a full test, and by that I mean I don't think we're coming all the way back down to 2200, but anywhere between 24 and 2700 I think is doable and probably likely. Right now I believe this is week 16 of this intermediate rally. A normal bottom usually forms sometime between 20 and 25. So if you're trying to buy for a long trade, 16 weeks is just too early to be trying to buy. It's way too late to keep riding this rally. You're kind of playing musical chairs, and you're at risk of getting caught at the top, especially in the NASDAQ. I'll show that in a minute. But this is just probably a good time to be just sitting on the sidelines and waiting for that buying opportunity. But I would say that there's little chance of that buying opportunity arriving ahead of week 20. So we probably got at least 4 more weeks. So you're just going to have to be patient. You're going to have to let this develop. And like I said, I suspect the Fed is going to keep this market more or less propped up into that FOMC meeting. And then after that, we might have a chance for some kind of sharp corrective move into the next intermediate cycle low. So one thing that is concerning is the banking index. It is not following the rest of the market, is diverging badly. That's not a good sign. It's a warning sign that there are problems with this rally at this point. So again, probably just a good reason to just kind of sit on the sidelines and wait for your opportunity. I know many retail traders, they are just incapable of doing that. They feel they have to trade every day, and that's often why people take these short trades and end up just losing money over time, is they have no patience. They can't control their urge to gamble every day. But right now, I think is a good time to just be on the sidelines. And here's what's really worrisome is the NASDAQ. Now, I called this bottom right here. When we got this reversal, it was coming a little bit early in the daily cycle, but I said at the time that I thought the plunge protection team had probably stopped the correction a little premature, and so anybody that wanted to trade this could buy on this swing. So our buy signal was right here on this swing. And at this point, anybody that's holding has a nice profit, but my recommendation now is to exit on any close below the 10-day moving average, or if you're just happy with your profits. If you feel like you've made enough money and you don't care if the market keeps going up, it's just important to you not to get caught at a top when it comes in, then you can sell anywhere in here and just be happy. I mean, realistically, we got in down here, we rode this entire move up to this point here where we took profits, and then I called this the bottom of this correction. So we've rode this another piece of this rally, nice move in this rally. So if you're happy with those gains, and I don't know how anybody couldn't be, you could just take profits and be done, and then wait for the next one of these. And now of course it's not going to be as severe as this, but still, if you wait for an intermediate cycle low, then you're in on week 1 of an intermediate rally, and you've got a lot of weeks ahead of you. If you're on week 16, you're playing with fire. You could get caught at a top at any time. So much better to and this is how I tend to play. I try to call these bottoms. I can very often get pretty close. We can ride a nice move out of that intermediate cycle low, and at some point I'm happy with my gains. I get out and I wait on the sidelines, and I wait for the next one of these, and I try and get in on week 1 again, and then I can ride it for another 10 or 15 weeks and do the same thing. And it doesn't require me to pick exact tops to make a lot of money and to significantly outperform the S&P over time. It just requires patience, which most people don't have. But this is a concern to me. Price is stretched very, very far above the 200-week moving average, and you can see what happened when it got into this position back in February. The rubber band was just stretched way too far to the upside, and it was a contributing factor to this massive crash. And we're doing it again. The Fed has pumped a lot of QE into the markets. They've stretched price far too far above the 200-day moving average. We're getting late in the intermediate cycle, so we're at risk of another sort of a possible, at least semi-crash event. I would say it's not out of the question to at least come back and test this 200-day moving average at some point, and maybe drop below it. All of these interventions in the market are causing this. They're stretching price too far above the moving average. When the profit-taking event occurs, it's severe and causes price to pendulum and travel far below the moving average. Then we get more monetary stimulus, and they didn't learn their lesson. Stretch it again to the upside, and I'm pretty sure the end result is going to be another, some kind of mini crash event into the next ICL. And without doubt, they will do the same thing. They'll pump up the QE, and probably we'll get another V-shaped rally after that, and we'll certainly, depending on the outcome of the election, if the Republicans happen to sweep, then the market's going to take off to the upside and never look back. And if the Democrats were to sweep, then I think we've probably got some problems. It'll depend on whether or not they continue to drift down this path of socialism, or whether they come to their senses and and try and normalize the government. But that remains to be seen. But right now, it's just too late in the intermediate cycle. I'm not telling anyone to short. It's just too hard to do. I've seen people trying to short all the way up, and they've just lost money after money after money. And I have no idea whether or not this is a top. So it's not a signal to sell short. I'm just saying the best strategy right now is probably be on the sidelines, wait for the intermediate cycle low, and then when we get it, my system works really good for picking the bottoms. The Fed will probably help you out with another round of QE, and then that will be the point to buy, and hopefully we get in on week one, and then you'll have 10 or 15 weeks to hold that position into the next intermediate top, and you'll add to your portfolio. The people that can do this, the people that can develop the patience and employ this contrarian strategy, will make money over time. They will almost certainly massively outperform the S&P. The people that are gamblers and have to trade every day and refuse to listen to me about selling short, they will probably be stagnant over time, or lose more likely they will just lose money over time. And there's just nothing I can do to help these people until they can control their emotions and learn patience. There's not a lot of hope for these people to make money in the markets.